Longtime CEO Bob Iger stepping down effective immediately. He will be replaced by Bob Chapek. Both men are sitting down right now with Julia Boorstin in Los Angeles in a first on CNBC interview. Julia, take it away.
Thanks so much. I am joined now by Bob Iger, as of today, executive chairman of Disney, overseeing all creative endeavors at the company, and also Bob Chapek, as of just now, the new CEO of the Walt Disney Company. Thank you both so much for joining us today. So first to Bob Iger. You, back in 2017, when you announced the Fox acquisition, extended your contract as CEO through the end of 2021. Why make this change now, more than a year and a half before your contract is up?
Well, the company has a great collection of assets, businesses, brands, franchises, particularly with the acquisition of 21st Century Fox and the purchase of the larger share of Hulu. And we also have recently deployed a very new and extremely important strategy, the direct-to-consumer strategy that led to the ESPN Plus product being launched, and then, of course, Disney Plus, which launched in November. So as we looked at the businesses, we felt we have a great set of assets, we have a great strategy. What's next? And what was next in terms of my own priorities is making sure that the creative pipeline of the company was really rich, that all of our creative engines were working extremely well, and I wanted to spend more and more of my time on that. But the only way that I was able to do that was to give up the day-to-day running of the company, to pass the torch on to Bob, so that my direct reports and the authority over our businesses will shift to him, freeing me up to do what I think is our next big priority.
Now, for investors, this seems abrupt. The stock is trading down in after hours. I interviewed you just a couple of weeks ago after your quarterly earnings report. How long has this been in the works, and for how long have you identified Bob Chapek as your successor?
Well, we've had a succession process that's been ongoing with the board for actually a few years. It's something that we talk about virtually at every meeting. And we identified Bob a while ago as a likely candidate to succeed me, but they went through a thorough process and discussed other possibilities. So it's, again, something that the board has been engaged in for quite a while. They got to know Bob very well during that period of time. He ran one of our most complex, one of our most important businesses, Global Parks and Resorts, for instance, during a time of great capital investment and a time of great change, and did so very well after working for the company for 30 years. In terms of the market today, what's going on obviously today is something that is, very serious and certainly a concern to us. But the timing is, unfortunate, but not anything that we can control. And it certainly didn't play into the timing of this decision.
And you are signed on to continue through the end of 2021, overseeing all the creative elements of the company. But at the same time, Bob Chapek is going to be running the day-to-day business. For you as executive chairman and you as CEO, will that create confusion about who's in charge if you're going to be reporting to Bob Iger? How do you address those concerns and potential conflict while you're still executive chairman?
Well, we've worked together extremely well. Actually, our senior management team has worked together quite well. We know each other well. We get together often. We share a number of the issues of our days in terms of running the businesses. So there's a lot of familiarity, a lot of collegiality. In terms of confusion, we're not really concerned about that. Bob is going to be running the company and running the day-to-day businesses. As I said earlier, all of my direct reports shift to him. I have one direct report, and that's Bob. We'll be focusing on the creative, but any of the big creative decisions that have to be made, I fully intend for Bob to be at my side. It's important for him to learn as much as possible. What this is about really is, we believe, a really good succession process and a really smart transition process. The goal here, during the period of time that I will be executive chairman, is to create a transition process that is smooth and functioning and effective, and we're not concerned at all about creating any confusion.
Now, for you, Bob Chapek, congratulations on this new role. Your predecessor, Bob Iger, made a number of massive changes that really transformed the Disney company: the acquisition of Marvel, Pixar, Lucasfilm, the launch of the direct-to-consumer business. What do you see as your mission going forward? Do you imagine transforming the company as much as he has?
Well, I obviously have huge shoes to fill. I mean, Bob's legacy in the company is just profound. I think my role is now to take the strategic pillars that he's so well established over the last 15 years and continue to work on those and implement those in the marketplace, most importantly our direct-to-consumer initiatives, but at the same time look around the corner for what disruption might be going on in the marketplace that would necessitate a fresh look at those things. But right now, the course that Bob has laid is one that we fully intend to follow, and I think will pay dividends for our shareholders for years to come.
What does it mean for you as the new CEO to have Iger as the executive chairman for more than a year and a half?
Well, it's certainly a privilege to have Bob, still available and there for guidance. I've had a front row seat to Bob Iger's magic at Walt Disney now for 15 years, and to be able to extend that for the next year and a half or so while I make the transition into this new role is just a luxury that, frankly, I couldn't ask for more.
Do you feel like your mission and your purpose as CEO is to continue on the path that Iger has started, or do you envision more need for change or potential acquisitions or sort of shifts down the line?
I suspect in the beginning it will be more of the same, because essentially the strategies that Bob's put in place are really, long-lasting in terms of where the company's going to go in the short term. Over time, though, as we all both recognize, disruption and transformation are just inevitable in this business, and it hits each one of our businesses a little bit differently, but it's inevitable that those businesses will be disrupted, and it's recognizing at that time when we'll need to shift. And that's, I think, the art of the job.
You are taking on this job at a moment of incredible change, not just in the streaming business. We're about to see the launch of several new streaming services, but also in the parks division. You, until today, ran the Parks and Consumer Products division. 2 of Disney's parks are closed right now, Hong Kong and Shanghai. I know you oversaw the launch of the Shanghai park. There's no sign of when these parks will open. Are you concerned about the long-term impacts of coronavirus, not just on those parks, but potentially also on the cruise business, which you've run?
The long-term health of our business is really a function of our consumer demand for our unbelievable storytelling and our product. And while this is certainly a bump in the road in terms of the coronavirus, we'll come through this like we've come through every other challenge that we've had, and that affinity for the brand and our storytelling will way outlast any type of short-term blip that we have from corona.
Bob mentioned the stock market's decline over the past 2 days. It's been a very volatile time in the markets, and there's always a question sort of how the consumer will react. Will there be an economic downturn or a correction that could impact consumer spending? It could impact advertising. What's your outlook as you take the helm of this, international, major, multi-platform media industry about the potential risks to all of those different factors?
We're always very conscious of disruptive elements, socioeconomic elements, social elements that could come in at any time and disrupt our business. But I think when you have the core assets that we've got, those franchises, the Disney brand, once again, we'll sort of see our way through all those disruptive elements. Doesn't mean that we won't get surprised tomorrow, but we've got the strength to get through them all.
Now, you've worked in many different parts of the Disney business, most recently parks and consumer products, also the studio, distribution of home entertainment, but you've not worked in the TV bundle business, the part of the business that is suffering from the cord-cutting trends, which I've talked to Bob Iger about many times over the past several years. As someone who has not worked in that business, what's your outlook to the threat of cord-cutting and how to handle it?
Well, to me, the commonality between our businesses is our consumer. And I've worked in consumer businesses my entire career, and it's not ironic that our strategy for the media business now is a direct-to-consumer business, where we have that one-on-one relationship with our customer without necessarily having a lot of middlemen in between. That's my sweet spot, and I think that is something that I could leverage now throughout all my experiences, not only at Disney, but even before Disney, in terms of figuring out how we take the data, the information, the technology, and once again, our storytelling, right direct to the consumer so that we can take all the great equities that we have and continue to build those for our shareholders.
Now, Bob, as you focus on the storytelling and less on the day-to-day, do you imagine potentially extending your time at the Walt Disney Company beyond December 2021?
No, I don't. No.
So what
I've been to the company 45 years, and I was in the CEO job for 15 of those years. I was president and COO for 5. So it's been a fun run, and I'm looking forward to the run ending. But I still have a job to do.
And what will you do after 2021?
I'm going to use my imagination.
You will use your imagination.
I'm going to go to Disneyland.
You're going to go to Disneyland, as I'm sure you'll probably make your way there many times before then. Well, I want to thank you both so much for coming to us after this historic announcement. Bob Iger, Bob Chapek, thank you both so much for talking to us today. Guys, back over to you in the studio.
All right, Julia Boorstin with Bob Chapek and Bob Iger in a first on CNBC interview. Julia, thank you very much for bringing it to Fast Money. All right, so, Tim, we listened. Anything you heard from the incoming or outgoing CEO, and still executive chairman, by the way, that would change your investment opinion on Disney?
If you take everything at face value, that this was about secession and transition, then this is nothing really changes for Disney shareholders. This is certainly the best content out there, arguably some of the best DTC out there, or I should say at least a challenge to Netflix, and certainly trading at a significantly cheaper multiple in that core DTC business. But as someone that's long the stock and someone that was hoping we didn't hear about either some shakeup at the company for a specific reason or the fact that there was structurally something broken. This is about what we thought was going to happen. There was nothing new on news today. The timing was uncomfortable based upon the day that the markets had. And obviously, this was never going to be a happy day for Disney shareholders. But that's what I heard.
Yeah, I agree with that. I actually took a lot of comfort from both the way that they set up why this happened and also the plans going forward, meaning that there's going to be sort of a continued succession. This isn't just happening today and Bob Iger rides into the sunset to go use his imagination.
Well, they got to say that, right? I mean, you've got to have this continuity. I mean, we look at a Netflix, Guy Adami or Dan. It's like, you know, the streaming wars have really just begun. Is now the time to change?
No, listen, I think to your point, what else are they going to say? Of course, this was in the works. We're well-oiled machine. Succession plan would be there another year. It all makes sense. Just a question of where you buy the stock. And it goes back to what we talked about earlier in the show. You have to have your line in the sand. And for me, 120 makes as much sense as everything. It'll give the stock a more reasonable valuation in terms of where it's been. And it's a level that we had trouble with on the upside for many months, many years ago.
Can I ask a question? So, but what has changed? And maybe you felt this way for a long, since that point. Because to me, the news over the last couple of weeks has not really changed for this company. Today, what we heard apparently doesn't.